Alright, let's talk about something that's been popping up everywhere lately. Index Universal Life Insurance, or IUL for short. You've probably seen it pitched as the ultimate financial Swiss Army knife life insurance, tax-free growth, and even a retirement plan, all rolled into one neat little package. But is it really that good, or is there more to the story? So here's the basic idea. An IUL is a type of permanent life insurance. That means it's designed to last your whole life, not just a set term. But here's where it gets interesting. Part of the money you pay in, your premium, goes into a cash value account. That account doesn't just sit there, it's linked to the performance of a stock market index, like the S&P 500. If the market does well, your cash value grows. But if the market tanks, you're protected from losses, at least, in theory. Now you're probably thinking, wait, I get market upside but not the downside. That sounds amazing, but pump the brakes for a second. There's always a catch, right? First, your gains are capped, so if the S&P 500 shoots up 20% in a year, you might only get 10%. And if the market drops, you usually get a guaranteed minimum, like 0%. That means you don't lose money, but you also miss out on the full upside. And fees, let's talk about those. IULs can come with a whole stack of them: cost of insurance, administrative charges, rider fees, you name it. Over time, these fees can seriously eat into your returns. Plus, the way the cash value grows is complicated. It depends on how the insurance company credits your account, which can change from year to year. Not exactly the transparency most investors love. But there are some perks. The cash value grows tax-deferred, and you can borrow against it tax-free as long as you play by the rules. For some people, that's a big deal. Plus, there's the obvious benefit: life insurance for your loved ones. So, is an IUL a good investment? Here's my take. For most investors, there are simpler, cheaper ways to grow your money, like maxing out your 401k or investing in index funds directly. IULs can make sense if you have a high income, you've already maxed out other tax-advantaged accounts, and you want the insurance component, but they're not a shortcut to guaranteed wealth. Bottom line, don't let the shiny marketing fool you. Do your homework, read the fine print, and always ask questions. If you're considering an IUL, talk to a licensed financial advisor who doesn't have a stake in selling you one. That way you'll know if it really fits your goals. Thanks for hanging out with me. If you learned something new, subscribe and hit that like button, and I'll see you in the next video to make your money last.